Hello everyone. Today we are going to discuss accessing financial services. What do banks offer and what is it right for me as an entrepreneur if I need financial services? First, just a few words about myself. So I'm a doctor in economics. I'm specialist of banking and financial systems, not financials, and dedicated to Arab countries, African countries, and emerging countries in general. I'm also a banker. I'm working for the second largest French bank. And I'm also a journalist writing for English and French magazine dedicated to Africa. So what are my personal interests are mainly traveling, also thinking, philosophy, and doing sports. And I love to do snowboard and kite surfing. So I like adventure. And accessing finance is an adventure. So after this webinar, you will be able to recognize the most common funding solutions for small businesses. You also will be able to choose the most adapted solution, financial solution to your expectations and your needs. And you will also be able to know about the banker's objectives. So in particular, this webinar will cover the following topics. So we will introduce the subject, then I will define what loans are, then what lenders are, or who lenders are, what guarantees are, and why bankers ask for guarantees. And we will resume our discussion. And there is going to be, of course, a Q&A session at the end of the webinar. And don't forget, you still are able to ask for questions during the webinar within the box at the bottom of the slides. Okay. The context of financing is quite improving. Access to sources of business financing has globally improved in recent years. There are more solutions, the range of financing solutions are wider, and globally the financial systems and banking systems in all emerging and developing countries are in a better shape and more developed and structured than the last decade. From the entrepreneur's perspective, it nevertheless remains difficult to obtain the necessary funds from a bank or from a financial institution. From the banking associations, the situation has improved. Globally, the statistics of lending are going better, and the volume of lending in all countries around the world are improving. But from the entrepreneur's perspective, the main difficulties remain to get a loan, to get access to external finance. External finance versus internal finance. Internal finance is the finance, the capital you get from your own money, and external finance is what you get when you ask for someone else outside the family, to a bank, institution, or capital. This presentation is intended to provide the women entrepreneurs, especially, with an overview of the available, accessible, and timely banking funding sources available for small, women-led businesses. So, first, let me define what loans are. There are basically two modes of financing that operate in tandem through the life of the company. There is debt and equity. Equity is capital. It's money you get from internal aspect, personal equity from founders of the company, for example. It's external finance you get from venture capitalists, from business angels, or it's money you get directly on the markets. Other is debt. What is debt? Debt is also external finance. And debt is mainly intermediated finance. It's finance, funds you get from an intermediary, from an institution, from a bank, or from a microfinance institution, or from a crowdfunding platform. Debt is loan, mainly, but you can also get money through debt on the markets, and that is bond. We are mainly going to focus today on loans, that is intermediated finance. Lending is the most well-known and commonly used system of debt financing. Lending is correlated to savings. When you have savings, then you can rent the money. A loan is a contractual agreement with the lender. The principle of the loan is simple. You will agree for a repayment schedule and an interest. You will need to repay the loan plus interest. Interest depends on the amount and duration of the loan. This interest can be calculated with a fixed rate from the beginning to the end of the loan. In this case, all of the payments will be of the same amount. Interest can also be calculated with a variable or indexed rate, that is to say, with an interest rate that may vary up or down depending on the performance of the index. So all of this should be written at the beginning of the loan within the agreement in an amortization table, which will be attached to the deed, to all the documents you need to get from the banks or for the microfinance institution at the beginning of the loan. So what is important when you want to get a loan is your capacity of repaying the loan. So before taking out a loan, before even going to get or trying to get a loan or a meeting with a banker, check if your monthly income can afford to repay the loan. This type of financing can be used both by individuals for their projects and by entrepreneurs, associations, and large companies. The repayable loan can be used to acquire the initial materials required to start a business, to obtain a first contract, and thus engage in entrepreneurship, or else it can be used to hire an employee to develop the business. The interest rate for microcredit is often slightly higher than the rate of a conventional bank loan. Be careful. The amount is smaller. It might be easier to get a microcredit, but it might be also more expensive. This rate includes a contribution to the Solidarity Fund used to finance other microcredit schemes for future applicants. The rate also includes the efforts made by the institution to get the loans repaid. Usually, people from the microfinance institution go directly to the people to get the money back. Conduct a comparison of microcredit interest rates. They can be high if you need a large sum of money and thus strain your operating profit margins. In this case, you have to compare with banking loans. So what are the most common loan products? So as I mentioned earlier, there are three types of institutions providing loans. First type of institutions, the most common, the most known, are the banks. Banks offer the widest range of products regarding loans. If you have a company and you have some investments to make to either develop the company or launch the company, such as buying vehicles or computers, or more immaterial investments like buying a license. You can ask for investment loan. If you have some temporary difficulties, if you are awaiting money from your customers, you can ask for a revolving loan. This is more like an authorization given by the bank to get overdraft. So another possibility is lease. You can use it for real estate. You can use it for equipment. And by leasing, you pay a rent during a pre-established period. At the end of this period, it could be some long-term loan. It can be 10, 15 years. At the end of this period, you can buy the product, or you can just give it back and get a new one. Business mortgage is used to buy a property, and the specificity of the product is that the property itself will be used as collateral for the loan. So payment extension is used to pay your suppliers when you don't have already the money from the merchandise, for example, you have sold. Factoring is a specificity used more for big companies, and you can, by this operation, finance the accounts receivables of your company. It means that you sell to another company, a factoring company, the accounts receivable for your clients. So this company will go to the clients and ask the clients to pay the money due. The second type of institution are microfinance institutions, and they mainly work with small amounts of lending dedicated to investment mainly. If you have a very small company, or if you're self-entrepreneur, if you only need 100, 200, 300 US dollar equivalent investment loan, then microfinance institutions could be the easiest way to get the money, because microfinance institution is close to access. It's easy to access. The third type of funding solution I would like to mention today is a very it's a more recent option provided by the crowdfunding platforms that can that channel savings to companies or projects for small amounts. They are not an institution, but this is still this can be an interesting solution for small projects in emerging countries. You have to be selected by the platform, so you have to propose a project that is in line with the platform, the crowdfunding platform objectives. For example, doing organic products or climate change orientation projects, and so on. Lastly, I would like to mention the unsecured loans. Unsecured loans are aimed at financing medium-term projects. They are granted usually by non-banking institutions, and they offer reduced or even zero rates. Usually they are offered by public institutions willing to develop and to help develop the business creation. and especially they are useful for initial investment or the working capital requirement. Nevertheless, there are networks existing helping women entrepreneurs in particular to access finance at the local level, regional level, or national level, and they are usually a good solution to help you and to choose the best funding solution. So, who are the lenders? The lenders are the same I mentioned: the banks, the microfinance institutions, and crowdfunding platforms. But who are they exactly? Banks are financial intermediaries, and what defines a bank is mainly that they accept deposits and they channel the deposits into lending activities. This is why they are called financial intermediaries. They do the transformation between savings and lending. The main job of the banks is to get enough information regarding the companies or the people they lend the money to be able to know what is exactly the level of risk they take when they lend the money. As I mentioned, the banks offer a large range of loan products. And in the recent decades, they have even widened or the range of products. They intervene in all segments of finance today. Microfinance institutions. Microfinance is a source of financial services for entrepreneurs and small businesses looking for small amounts. And microfinance institutions can serve people who have difficulties to access the banks. And why is it difficult to access banks? Because in most of emerging and developing countries, banks only serve the big companies or the very rich people. They have really difficulties to offer small amounts loans. Microfinance institutions can lend to one person, but they can also lend to group lenders when several entrepreneurs come together to apply for loans and other services at the group. So the group will provide a guarantee to the microfinance institution. And just to be clear, the microfinance institution provide microcredits. This is why you will find these two terms, but they mainly talk about the same thing. What crowdfunding? Crowdfunding is a way to put in contact people with savings and businesses needing for money. So the crowdfunding platform raises money from the public to support a business, a project, a campaign, or individuals. It has developed a lot lately, but it still has to develop, and there are many needs today to be fulfilled by crowdfunding. Okay, so what are guarantees? Why are they so important? So first of all, guarantees are collateral. It's the same. You can hear both terms, but they cover the same issue. The issue is that to protect themselves, banks and microfinance institutions will ask for guarantees and a substantial personal cash investment. What can guarantees be? They can be deposit accounts within the bank already. They can be personal property, other forms of guarantee. They can be mortgage on business property, for example. In some countries, trying to foster women and access to finance, gold, jewels can also be used as collateral to get a loan. Don't be afraid to go to the bank knowing that they will ask for guarantee. There are many ways of giving the guarantee, and the guarantee is just for the life of the loan, and at the end of the loan you will get the guarantee back if everything was in order. The bank will also require invoices or quotes to justify the company's investment. So you have to go to the bank or to the microfinance institution or the crowdfunding platform only if you have a project, if you know what for you need the money. Otherwise, you will have great difficulties to get one, because you have to have a project. What is default? If you cannot repay the loan, the bank or the microfinance institution will first negotiate delays with you. They will talk with you. They will ask you why, or do you have a problem? How can we try to figure it out? And at the very end, the bank or the microfinance institution will keep the collateral. So don't forget, lending money is the core business of the banker. So the banker is waiting for lending you money in one sense. But his objective is to get the money back, plus interest, of course. Okay, let's sum up what we have said. So first, don't be afraid to go to the bankers. They won't say it so clearly, but they are waiting for you to make business. And even if there are many men and you are women, you can be afraid. It's correct to be afraid to go to the banks. But we all live on the same planet. They are not that different. You will need to be patient and sometimes even resilient. You will meet different banks and financial institutions, various interlocutors over varying time intervals. And you will face the same questions from your audience. Be patient and do not give in to discouragement. Keep knocking on the doors. Do not put all your eggs in the one basket. In your search for funding sources, multiply contacts with banking and financial institutions. Do not canvass only your bank or your institution. Browse your own network and contacts and see where you can find funding opportunities. If you are an established organization and need funding for scaling a particular project, then you need to look for funders in corporate or non-profit sector from that particular topic or issue you are working on, like I mentioned for crowdfunding platforms. For example, an organization working on women empowerment through trainings need to look for donors who fund women-related trainings. Okay, thank you for attending this webinar today. I hope you have now more information and regarding all these issues. Now, having completed this webinar in particular, you should be able to differentiate between the different funding options, be able to know the key parameters to check before making an informed decision. What kind of loan should you get? Should you go for a loan? Which one to choose according to the company's needs? And how to be well prepared. So now the floor is yours, and I would be very happy to answer your questions.
Make sure you're not on mute, please.
Hi everyone, this is Robin here from the Sri Blair Foundation for Women. Thank you for joining the webinar today. We're just experiencing a slight technical difficulty with the Q&A portion of the session. We're just trying to get Estelle back so that she can answer your questions. If you can bear with us for a few minutes, hopefully we'll get her back on the line. Thank you.
Hello everyone. Hello everyone, this is Estelle. Thank you for attending the webinar today. We have many questions regarding this presentation today. First, I will answer a question which regards the best option to work for an SME in a startup phase between venture capital funding or bank funding, and why. The question is, when you are beginning with a business, you have to convince the lenders of the capacity of doing the business, and as I mentioned during the presentation, your capacity to repay the loan. So usually the best option is to get and to raise money from yourself, what we call the love money, from yourself and the people around you who trust you, and then from public or private funders able to take a special risk. That means the venture capitalist, and in combination with bankers. Some bankers are able to take risks, some others less. So the best way is to go from love money to venture and capital from business angels, and then to ask for a loan from a bank or more generally a banking institution. Regarding we had also a question about East Africa, Kenya, Uganda, and the differences between the different banking models and the ability to get a loan. Mainly in the global community, we can distinguish between two models. The first model I can qualify the U.S. model is based on your notation for credit notation. Is as more the more you get credit and you reimburse the credit, then you get a good note, and the best note you have, the best is your capability to access a loan. The second model is the more French model, which is based on your capacity to repay the loan based on your revenues. So according to your country, one or the other model is preeminent, and but globally these are the two differences from a country to another. There is a lady looking for angel funders to help in expansion of her business. Where to start looking? I would say the web is a good solution to look for a business angel. The business angel work function based on a network. So there are links on the web, but also there might be associations in your country. You can access through the promotion of entrepreneurs if there are some in your country. Judy from Kenya asked, how do benefits from a bank versus a microfinance institution differ? I would say mainly the amount of the credit, of the loan. Microfinance institution provide smaller loans than the banks. Anne from Kenya asked, what point in time in your business should you consider approaching the bank for financial assistance? I understand by financial assistance is of course, accessing a loan. I would say you have to first have a solid, established business plan. You have to be really solid and a robust ID. It's more than an ID. And nowadays the banking and financial community is quite risk adverse. So it's really important to be able to convince the financier to invest. What we can know, or what we know about what's happening in Silicon Valley in the U.S. is really specific to the Silicon Valley in the U.S., where there are people able to invest a lot of money in businesses at a very, very early stage. You have to build a business plan with really be able to project yourself and your activity in the next years, and it's really important. Samira from Nigeria asked about the kinds of security and collateral that banks require from SMEs. Usually the collateral are there are many types of collateral. The recent international developments try to enlarge the number of collateral to be accepted. Usually you can use the real estate. You can use the banking account also, and it's really different from a country to another. In trying to develop the SMEs in some countries, some initiatives have even tried to use as collateral the jewelry from the women, trying to specifically develop a business for women. Oh, we have regarding collateral, we have also an interesting question from Estelle. And how can a new entrepreneur get funding without collateral? If you want to start a business and you have no love money, you have no collateral, there are in some countries institutions that can be the collateral for you. They can kind of be your collateral, and you will pay this service. But it exists still within the different initiatives to help SMEs and small companies. We have also a question from Wendy regarding a crowdfunding platform and which one has been keen on providing loans to small microfinancing companies. The crowdfunding platform usually have a kind of a philosophy, or they have a name. They have an idea. They want to help small handcraft production entrepreneurs. For example, in Africa, it's the beyond this idea or this goal. They can raise money from European people, for example, or US to fund entrepreneurs. So, Wendy, your question is a little large. There are many crowdfunding platforms. I would just add after the webinar, the crowdfunding platform are really a new thing, and it still has to be rationalized, and it's developing very fast. There are many examples you can also find on the web, and they are more aimed to help small businesses or high-tech businesses. This is how they differentiate one from another. We have a question from Rosalind in Kenya. How do you decide whether to take out a loan or an overdraft? I would say an overdraft is a loan, but you might pay a very higher fees with an overdraft than with a loan. That a loan you can negotiate it ex ante before with a banker. Okay, so I really thank you. I was really happy to be with you today, and I hope you had a lot of information today, and I invite you to continue the conversations on the forum afterwards. I will be able to answer your questions, and the management team asked me to remind you that you have to. They would be very happy to have your return and to fill the brief questionnaire after the session ends.